Lead.Pray.Hodl. So how's it going, man?
It's going great, man. A beautiful day here in Southern California, I must say. A little later, we're going to walk the Hollywood sign and do some hiking with the kids and the dog. So just making it a beautiful day, man. I'm excited. Bitcoin's going up. I mean, I couldn't ask for a better week.
All right, awesome. Yeah, I guess they must be getting a little bit. Oh well, we'll see. We'll see how the Rams do in Chicago, right? How the weather transforms out there. But yeah, it's been a busy week in Bitcoin. Price movement, politics, nation states, and some old school investing wisdom colliding with new school, I believe, right? So let's break down what actually mattered and what to watch next, right? So let's see. I think there was something what Warren Buffett famously says, rule number one, right? Never lose money. And how does that rule apply to Bitcoin?
Yeah, so Warren Buffett has two rules. I did in my weekly recap of what's going on. I said, rule number one, never lose money. Rule number two, always follow rule number one. So you never want to be losing money. So Buffett's real rule isn't to never lose money in that sense. It's to avoid permanent loss of capital. And when it comes to Bitcoin, one of the ways you could lose permanent loss of capital is straight through savings instead of using Bitcoin or real estate or any other asset. Sometimes you just let your savings melt away. That's why those old houses from 1955 that were like 30 grand are now $1 million, because it's not that it's a newer house. It's just that money has been debased over time. They continue to print. Even I did a video yesterday talking about 55 billion are about to be printed starting Tuesday. And so it's not just about investing or not selling your Bitcoin or hodling. It's sometimes just not losing your capital. Sometimes losing your capital is just the worst thing you could do through a savings account. You better at least have it in a high yield savings, but I prefer Bitcoin, of course, or STRC, which I mentioned in this video before. But Bitcoin volatility doesn't equal permanent loss, and people need to understand that. Selling due to fear equals permanent loss. A lot of times, whether it's your stock, even in a real estate crash, like some people held their houses during the great financial crisis, and some people panicked and sold everything or lost everything. So selling during fear is never a good time to do that. And we just know, like I said, fiat guarantees loss through inflation. We've just been getting killed through inflation since the money printers really turned on more than ever during COVID. And it's been painful for a lot of people. That's why you see that K-shaped economy. The top 10%, they're doing 49% of the spending out there. They got money and they're doing things. And the bottom 80%, they're hurting. They only equal 25% of the K-shape. So it's a big deal right there. So people need to understand that. What's up, everybody? Good morning.
Yeah, good morning. I see Hyder. I see JC tuning in Chicago, so he knows he's ready for the game. He said everybody's going to play a fact. He said he was 14 degrees. He messaged me already. But is volatility the same thing as risk?
Is volatility the same thing as risk?
Yeah.
No, it's not the same thing as risk, because volatility is something that a lot of people like me love. I'm trading covered calls. I'm trading options, longs, shorts, whatever you're doing. And when you do that, you love the up and down. You're making money up. You're making money down. This has been a great week for myself. But a lot of times, retail starts FOMOing in, they're repositioning, or they're selling up the top, buying again a little cheaper. So people need to stop worrying about anything other, like in terms of Bitcoin price. They need to worry about just long-term hold, being comfortable with liquidity moving up and down, and understanding that it's not a loss until you start selling it. The chop is good. The chop could create forced selling when there is a up or down. The chop could get people caught in covered calls where they are losing equity, and they could get caught people with longs. I just had a couple longs in MicroStrategy. They had a good week. They went from like 150 something to over the 170s, and they were great. I sold them, made a few $1,000. I just felt like it was a bottom call, and I'm happy with it. So it's been exciting.
I do see All-Nighter Hyder here, and he's actually in Gary. I did see a video with Millennial Mike heading out to Gary. They're going to work on some properties. So he said it's 15 degrees. So, I should maybe say maybe the new home of the Chicago Bears. They're talking about them moving the stadium to Gary, Indiana. But yeah, it's,
Bears too. So I hear you on that. I hope they don't go to Gary, though. That's a piece of crap city. No offense to whoever's investing there, Mike. But that's a dump, and I don't recommend that. They talk about the A, B, C, and D kind of communities and neighborhoods. That's obviously the bottom dwelling area, and there's a lot of. I mean, it ain't for the Bears, baby. That's all I'm saying.
Well, okay, right. So speaking of volatility, right? So Bitcoin pumped about 5,000 this week. So what actually triggered the move?
Well, a lot of that was the bond market stress. They pushed capital to more of a risk curve. Shorts were crowded after weeks of chop, so it forced covering. ETF started absorbing supply while miners were selling less, which is always great for pushing the price up. And thin liquidity turned marginal demand into like a sharp move. You also got to remember that the crypto bill was almost about to pass this week, and we'll talk about that I think in a little bit on here on this show today. But that excitement got people buying in. Like they want to. Everybody always wants to time it perfectly, beat the rush, and so they started buying Bitcoin a lot more since then. What I'm really happy about is they canceled that bill for that day at least, and the price didn't just shoot down. That was a really good sign that there's stability at this price. Do I think it still pushes back? Yeah, that's what Bitcoin does. That's great. I'll make some money on my call options and I'll buy it back. So it's okay with that. But things are happening in real time every day in Washington, in your own house. It doesn't matter. Don't panic. Don't get nervous, and understand why Bitcoin's important. Bitcoin's important because there's no government controlling Bitcoin. They're trying to control some of the crypto, and that's why the bill got shot down. But there's only 21 million coins. You could dig more gold, silver. It's kind of laughable to see all the precious metals going. It's like, well, we need more gold. Okay, dig. That's all you got to do. Now, for now, they're mining a few more coins. Don't get me wrong, but it's capped at 21 million coins. There's no CEO, there's no president of it. And once they reach the cap, that's it. You're just going to be selling at higher prices the whole time, which is an amazing concept that people don't understand right now. But you could build more houses, you could build a lot of things. But when people come together and they agree this is a value, well, that can make it very expensive. You even see limited supply of baseball cards or basketball cards. You got a Babe Ruth card right now. It's worth millions of dollars. And it's not because it's just a piece of paper, right, with somebody's face printed on it. But because there's such a limited supply of that, it's worth more. And if you understand supply and demand economics at the bare minimum, you know that you're in the right asset. Real estate, Bitcoin, ETFs like SPY or VO are all good.
So how much of this move was like positioning versus real demand?
Well, I think a lot of it was positioning more than when you say real demand. I just think that everyone, especially the whales, they're buying the Bitcoin right now. They sold at really great prices. And now you have retail buyers. See, retail, they have a shorter lifespan. They're only holding longer if they see it in profit. If things stay flat or they start to lose money for a little while, they get nervous, they get scared, and they start selling, and then price could go down and even capitulate. But it's not happening in this case. So a lot of times you want to see people just hold on to their Bitcoin. You want to see Bitcoin chop up higher. You don't want to see this banana zone go up. I tell you one thing, if Bitcoin shot to 200,000 tomorrow, I'd sell all of it. And it's not because it's useless or invaluable, but when things go up too high too fast, there's always it always retraces back some, not all the way, but when it retraces, that's when I would sell it, or that's when I would buy it back again. No matter what it is, it could be Tesla. Tesla was at 498 the other day. Now it's down to 437. Things retrace when they go up too fast.
So like you touched on, while price was moving, something interesting was also happening in the nation state level, right? So like, why is El Salvador selling 1 million Bitcoin backed passport, and who's actually buying them?
Yeah, so basically, this isn't about passports. It's about capital alignment. Everyone knows that Bukele, the president of El Salvador, is pro Bitcoin everything, which I think the whole world should be, especially third world countries and where their government is corrupted and really they're just printing money. That's why you see like, oh, $100 million dollar bills. Like, you know what I mean? You go to some country and you're like, wow, it's only $1 billion to buy that Coke. Well, that's because the government's corrupt and they're just printing money like crazy and they devalued it from what it was. I mean, even in our own country, if you think about it, they're not even printing pennies anymore because they cost too much. That's a bizarre concept if you think about that, right? So the dollar or the penny is no longer valuable at all. The dollar is the new $5 bill. The $5 the 10. And pretty soon they're going to get rid of the one. They're going to get rid of the quarter. And they're going to be getting rid of these things because they're so nominal in price that you're not even going to want to bother with them. You also got to understand that high net worth Bitcoiners, they want jurisdictional like optionality. They don't want to get trapped by regulation or taxes or any weird thing from other states or governments. So they moved to El Salvador and they want to make sure they could protect their money, because it's one thing to make money. You know how hard it can be to make money. It's another thing once you make it to keep it, right? That's a whole lesson on the Vanderbilts and Rothschilds, but that's, I'm not going to get into that history lesson right now. But El Salvador monetizes sovereignty, not tourism, and people really need to understand that Bitcoin is geopolitical now, right? And that's important.
You know, while some governments are embracing Bitcoin, others are clearly still uncomfortable, right? So a crypto bill was reportedly pulled at the last minute this week. Why was it stopped, and who had the incentive to stop it?
Oh, so the main person was Brian Armstrong. He's the CEO of Coinbase, and he really did something great. A lot of people were mad instantly. They're like, "Wow, why would you mess this up? We're investors in crypto. We want a little bit more regulation so we could get more adoption globally or even throughout our own country, right?" But he was protecting us from big banks and government trying to basically screw over everybody through privacy and different things, right? So the bill failed because it tried to control outcomes and not clarify rules. And that's the whole point of it. It's supposed to be the Clarity Act and things of those natures, right? The Genius Bill. Well, you're supposed to clarify things, not control them. And then they wanted embedded surveillance and permission token rails that were really going to hurt your privacy and right to privacy. And DeFi was under guise to really help or hurt consumers, right? We wanted protection. We don't want anybody like the banks wanting anti-innovation. We want innovation. We want to change. Money in terms of crypto or Bitcoin, especially, which is safe and it's cheaper, it's faster, it's longer. You don't need any rules or some bank holding your money for 2 days before they pay it to you. They can pay it to you instantly, which is kind of a joke even through wiring, right? Well, it'll be there next day on the wire. I don't know if you've done in real estate, you wire some big amounts of money and they make you pay to wire your money, and the banks are corrupt, I think. So it's a political retest, not regulatory clarity. And Brian Armstrong of CEO of Coinbase, and he's not the only one, love this idea, and he's going to push for making it better. They're trying to take away the yield off of people that own their Bitcoin and things of that nature, whereas banks, they loan you money, they get yield off the money they own or even your money that you have stored up there. So they're worried about bank money moving all to crypto and no money's in the bank accounts. Well, I can tell you right now, my money's not in the bank accounts anymore. It's in my crypto, my Bitcoin, and so on, even my brokerage accounts. So yeah.
All right. So, and all this sets the stage for what comes next, right? So, heading into next week, what should Bitcoin investors actually be watching?
Yeah, we want to see healthy leverage, right? We don't want to just see frothiness, right? We don't want to see like overheated and overpriced. We want to see people that are using their money into Bitcoin, into IBIT, into these things instead of perp trading, instead of leveraging their bets, instead of using margin. We want dollar cost averaging going on. We're going to be watching the dollar index and the bond volatility as we go through this week, looking at ETF flows, looking to see what the miners are doing. Are they selling their coins? Are they storing them up because they see something coming? There's a lot of people in Wall Street and Washington, and even in these tokenized places like Coinbase, Winter Minute, and so on. They kind of have an idea. They're inside the room, right? Michael Saylor's inside the room for MicroStrategy. He's been buying up. We have over 700,000 Bitcoins now. So they're buying things up just in a way because they know what's coming. Me and you think what's coming. We hope what's coming. They know what's coming. And anytime DC is fighting over crypto, they're fighting for money. They're not fighting for peace. But at least one person in terms of this, Brian Armstrong, was fighting for your privacy. So I look for all those things continuing the conversation next week.
Yeah. All right. So let's open it up to the chat. Let's see if anyone wants to drop any questions. Bitcoin, price action, policy adoption. I was on an earlier call today with the school community. Flavio was also there, and he didn't throw it in this chat, but he was. I guess he was talking about Robinhood. So, is your Bit or you do only IBIT, correct?
I do only IBIT for the most part. Yes.
Could you maybe enter on Robinhood or no through Robinhood or
different brokerages? I have different brokerages, but I use Robinhood as well. Yeah. You can do covered calls through Robinhood or any brokerage, really. You just got to understand what you're doing, and you got to be very careful, because when it comes to any brokerage, they'll take your money if you put the wrong numbers in. It's like, oh, you put a bid in for that limit price or limit order. Thanks, you messed up. So you got to be very careful. Sometimes on the stock charts, you'll see like a weird wick or like a wick candle up or down. That's because somebody really messed up. Yeah.
And maybe you can help Flavio understand maybe the difference between Bitcoin and IBIT then.
So a lot of times for Bitcoin, you don't want to, one, maybe you're worried about someone not having their coins, depending on what brokerage account you're using. So you would take your Bitcoin off the exchange and you would hold them onto your own personal wallet if you'd like. Or an IBIT, it's meant to just trade with Bitcoin. So if Bitcoin goes up a percent, you're likely going to see IBIT go up a percent as well. That's why they're very similar. IBIT has a little bit of fees. Bitcoin has fees as well, but it's meant equally to trade with Bitcoin. So they'll actually, they have 2 days to sell or buy the coins based on what's going on. So if there's a little movement in one day, they're not going to just sell your coins or buy more coins in their storage. They're going to wait, see what happens, and then they're going to buy accordingly just to keep it to match up and align up with your Bitcoin or your IBIT, right? So that's why the prices are similar. There might be a little difference because there's some fees, obviously, with IBIT as a that's where they make their money, right? They don't care what the price is of Bitcoin. They just want you investing in there. They want a store of value where they could move it, but they're holding your 50, 100, a trillion dollars, and they're just going to get their little percentage. Yeah.
Hyder says he's caulking windows now and it's starting to freeze up as I slide my finger down the bead I just put down. Never experienced that in San Diego. Yep, it's just a different animal out there. Definitely. Let's see. We this is primarily the weekly Bitcoin wrap up.
Yeah.
You kind of did touch on the policy that was stopped, but in real estate, there's a lot of talk Trump's policies. Heading up for the midterms, things like that. Is there any of those type of things Trump's talking about that's gonna maybe help or deter some of the Bitcoin investors out there in a sense, like how real estate, they're talking about institutional investors and all of that. Yeah.
Yeah, I think so. One thing I think just with politics, I teach history as well, world history, U.S. history, and different things. I try to like take the name Trump off of whatever you're listening to and go in with your own eyes about what kind of things it might bring to the table. Things like midterm elections, which are coming up here, are faster than you think. People are already forming their thoughts, forming their opinions. It could be about how they feel about what's going on with ICE, or how they feel what's going on with oil or Venezuela. Or in this case, a lot of times people care about money. So they care about like how much it costs to buy beef at the grocery store, or how much gas price is so they could travel with their family or go to work. And if their pockets feel tight, they're going to be uncomfortable with whoever is president. And in this case, he's trying to attack housing market, as you guys seen, right? Make it easier. Easier could be 50-year mortgages. It could be maybe transferring your loan to another property. It could be, any number of things that he's talking about. He's even talked about recently about 401ks, being able to borrow against your 401k and buy a house. I've had $3 million worth of real estate at one point, and I listened to everything that's going on in the housing. That's why I wanted to buy that Charlotte house, because I just knew it's a good time to buy. And when I say that is because I see that the politics are trying to align with the voters. And that's the one big key difference between us and the United States and China. China has leaders that are there for 100 years. Like, they're going with their own philosophy long term. The United States has leaders for 4 years when it comes to the president of the United States. So you might have a president put in these wonderful things. You might have the next president completely wipe all those out, put something else. Then we have another president, completely change it. So we've been going through these 4-year cycles lately where they're just changing things up and down, and the whole country's confused. Well, what they're really confused about is what the future holds, and the markets don't like uncertainty. And right now, it's uncertain what to do. Is the economy going to crash? My friends are losing jobs. Oh, maybe they're not going to crash because there's more borrowing, more lending, more availability. So I think what Trump's trying to do, and some of it is really good, and they're really trying to bring money back into your pocket. Look at the tax refunds that people are going to be getting, hopefully, in the next couple months, right? They're going to be filing right away. I did taxes for 7 years. The people that are getting money, they file the first couple weeks. The people that owe money, they always file at the end. They wait till the very last minute, or they put an extension on. So where does money go? Is it going to go into real estate? with lower rates? Are they going to park their money there? Is it going to go into Bitcoin? Is it going to go into a high yield savings? I don't know, but it's going to hard assets, and people that are wealthy in this country own hard assets.
All right, I don't see any questions. I guess we can wrap it up for the week. But just remember, Bitcoin doesn't reward reaction; it rewards patience, discipline, and clear thinking. Right. So lead with purpose, pray with intention, and hodl with discipline. Right. So we'll see everyone next week.
Yes, thank you. Subscribe.